What's up, everybody? Stocks by the numbers. Welcome back. Wanted to take a look here, diving into a company as per request. Someone in the Discord asked me to take a look at LiveRamp Holdings, ticker symbol RAMP, listed here on the New York Stock Exchange. Stock right now closed $34.31, up 9 cents, 1/4% on the day, closing right near the highs of the day, forming what looked like was almost a bullish hammer here on the daily, as you see right there, but I don't believe it closed at the top 34.31, high 34.33, but I mean, either way, personally, this company doesn't look too bad in my opinion. This is a data collaboration company and apparently signing some nice contracts here, getting some nice price targets, announcing recently LiveRamp integrates Ramp ID with Amazon ads. They work with Google, Microsoft, they said Walmart, so people are basically using this company's product and service, and what it's really doing is it's kind of increasing the conversion rates of buyers to the ads that they're seeing in the stores. So obviously it seems to be working out well. Market cap right here, 2.27 billion. The company's losing less than a quarter a share, 1.5 beta. Apparently, they're much more profitable than Wall Street has been anticipating. The company coming in with nice beats for the last 4 quarters in a row on the EPS side. Quarterly, we can see 158 million here going back to the second half of 22. We had the slight dip to 148. And then you can see for the last several quarters, we started to really ramp up here, so to speak, no pun intended. 154 million, almost 160 million, almost 174 million. Excellent jump there from quarter to quarter, in my opinion. And you can see the net margin percentage also going from around 20%, jumping up to -1%, +3%, +8%. So if the company keeps doing what it's doing, it will obviously keep generating more and more revenue, which will yield more and more profit, which will translate to a higher market cap and a higher stock price, in my opinion. So let's check some of the fundamentals here. So we come down here and we can see that over the years, the company has been performing very well, beating on 3 of the 4 last years and 3 of the 4 last quarters as well. On the EPS side, 3 of the 4 last years beating, and the last 4 quarters in a row beating on the EPS side. Now, annually, taking a step back, looking at the company here in the longer term, we can see certain things, right? Like we started out with no debt back here in 2018, 20 million, 13 million. Then we jump up to 61, we jump up to 47. We can also note something like the cash on hand, as you see, a touch over $1 billion here, cash and equivalents. And you can see just slowly stepping down year over year, 730 million, 581 million, back up to 600, down to 462 million. So looking at it like that, you may say, oh, what's this company just burning through cash? And then we switch over here quarterly, and we can see first I like to check the debt here, about 49.5 million, down to 47, 47, 46, 44. Also in the same time frame, the cash equivalents here, 453 million, 462, 470, 492, almost 499. So the cash on hand is going up while the debt is slowly going down, while the revenue appears to be consistently climbing, along with the profitability now for the last couple of quarters. So in my opinion, this one, RAMP, actually does look like it's growing well and could really be good here in the long term, potentially, as long as they keep those net margins up, of course. But we can see, just look at the growth here over the years, sub 300 million, almost 400 million, 443, up to 528, up to almost 600 million. I believe estimates for this year were higher than that. But yeah, we have assets heavily outweighing liabilities, both the short and the long term. Let's look at the earnings real quick. So we can see, look at how much further above estimates they are here. Just for the last 3 quarters alone, we have 29 cents per share, 43 cents, 47 cents. And that looks like almost we should be here, right? So it looks like, in my opinion, just off the last couple of quarters, this company may be a couple of quarters ahead what Wall Street expects. So even the dip here to 19 cents a share for next quarter, the company may post like 26 cents or something. They may still be heavily ahead of schedule, and then coming in here on 31, you might see 40 again. Here, you could see 48. Here you might see, 55 or something. So if the company continues to be ahead of schedule and outpace these EPS estimates, that obviously is going to be a nice green flag in my opinion. But even going back the last 8 quarters, you can see we only had one miss on the EPS side for the last 8 quarters, and going back over the years since 2015, you can see we only had 2 misses on the EPS side annually. So the company is definitely winning more than they're losing, in my opinion, based on these earnings reports. And you can see even here on the revenue side as well, the one miss in the last 8 quarters was less than 1%. So in my opinion, not really a red flag. And you can see that estimates are dipping down here for the next quarter or two, going back sub 170 million, but they seem to be maintaining now like that 160 million mark, and moving forward you can see 174 and then eclipsing 190. So what you want to see is, in my opinion, right, you can see the way they take that next leg higher, right? So we're in the low 140s, then they come out in the high 140s, and then boom, they have a great quarter above higher estimates. And then you can see, look, for the next 2 quarters, it dips back below that high, right? But it goes back to kind of where it was in the high 140s, and then it goes slightly lower to the high that it was from 158 to 154. Right? But they're able to come in above estimates, well, minus that one, of course, but you understand what I'm saying. They're able to kind of maintain that slight step back, right? Going from the 140s up to the 150s, and then you have the slight pullback, but you're able to maintain that business and stay in that lane. And then moving forward, boom, now we're taking the next leg higher, almost 160, breaking into the 170s. That's why I'm saying now pulling back to the 160s, if they can come basically in line. Of course, you have a slight miss, the stock may take a little bit of a hit in the immediate short term, but here again, if they can come in like 161, and here like 167, 168, if they can have that pullback but still maintain that business, and then gear up to take the next leg higher back into the 170s, and then eventually above into the 190s, and obviously in my opinion that really should translate to a much higher stock price. And here, looking at the annual forecast here, we can see for 2023, again, estimates 647 million, right? Consistently stepping up, missing in 2022, but you can see just basically a drop in the bucket. And moving into 2024, estimates north of 700 million, and then almost 800 million out to 25, with the profitability stepping up with it as well. You can see for 23 up to $1.35, $1.52. It's about a 10% increase. And no, it's more than a 10% increase. And then jumping up about 33% to above $2 a share. So that's why, if this company, in my opinion, just keeps doing what it's doing, this should really translate to a pretty decent winner here. And especially looking to close out the year, 650 million, market cap over 2.25. So we're talking, what, about 3.5 times this year's revenue. And then moving forward to 24, 700 million. Now we're talking about 3 times annual revenue, right? So we could say the company, in my opinion, is right around fair value. And of course, we could sell off, 7, 10, 12% from here and drop back to the low 30s. But in my opinion, overall, looking at the company, I do like what I'm seeing. The cash is climbing again. The profitability is climbing again. The revenue, basically, for the most part, consistently keeps climbing quarter over quarter, and of course year over year. More importantly, we have a lot more beats than we have misses. So in my opinion, I am seeing more green flags than red flags in the way I personally look at it. You can see the company not paying any dividends. Let's check some of these numbers here. Negative EPS, so there is no PE. Price to sales sitting here at 365. Yeah, for the last couple of quarters, that's slightly higher than it's been. But again, the company basically keeps showing us that it's more, for the most part, on the up and up. So I can appreciate the fact that some of these ratios are trailing higher here as of late. Price to cash flow up above 20 now. That's actually, yeah, I guess that's right about in line, trading at about 20.5 times cash flow. Price to book 239, of course, not the highest it's been, but again, for a while it was trading sub 2. Now it's up to 239. So that's why I'm saying we could potentially have a slight pullback, but over the longer term, in my opinion, I think we have a grower here. Return on assets bouncing around but climbing nicely here, almost flat in the last couple of quarters. Same thing with equity, invested capital. Gross margin percentage was in the low 70s, jumping up to almost 74 and a quarter 2 quarters ago. And now, as of last quarter, now currently sitting at 74.16%. So the gross margin seems to be on the up and up. The operating margin was negative double digits, slightly goes positive, and then jumps up now to double digits, north of 10% for the operating margin. EBITDA, basically same thing, was negative double digits, goes slightly positive, jumps up to double digits, now sitting here at positive 11.2%. Net margin percentage negative to positive, less than 3%, now up to 7.69%. Asset turnover, basically how much the company is generating off of their asset value, you can see is for the most part consistently increasing, going from 4.4 several quarters ago. Now we're up to 0.53. The debt ratios are maintaining and dropping. As we said, the debt has basically been in line with the company. They're not really letting it get out of control, and it seems to be like slowly ticking down, just a couple of million quarter over quarter, as the cash is also ticking higher. So that's why, in my opinion, if you think from a business sense, you would think, in theory, that would be a good green flag, right? You're bringing in enough money to not only consistently increase how much cash you're holding, but you're also able to throw a couple of bucks over there towards the debt and kind of dwindle that down quarter over quarter. So in my opinion, I personally view that as a nice positive. Cost of goods. Okay, so see, this is how I look at it, right? Because we have certain times where the cost of goods jumped up here to 43, 45 million, and for last quarter on the 173 million that they brought in revenue, it cost them almost 45 million. But if we go back to a quarter like this, you can see that they seem, in my opinion, to be more efficient, right? Because we're going from the low 140 mark up to the low 170 mark, so that's almost a 20% increase. But at the same time, the cost of goods goes from 41 million to about 45 million, so that's about a 10% increase, right? So it's not growing dollar for dollar. They're not generating so much more, and it's costing them so much more. It's the revenue brought in is outpacing the cost of the cost of the goods to get that revenue, right? So in my opinion, that's trending in the right direction. Total revenue minus cost of goods sold yields gross profit. We can see gross profit bouncing around here back to the low 100s, but getting up to 115, and the last couple of quarters surpassing that 118, almost 129 million. Operating expenses were getting higher here, almost 139 million back in the tail end of 22. And we can see coming more in line down here to the lower 100s. Gross profit minus operating expenses yields operating income. And we looked at this before. The operating income has gone from negative tens of millions, slightly positive. Now we're making tens of millions for the operating income. So this is why I'm saying, in my opinion, it really seems like a lot of these numbers are trending in the right direction. The one potential red flag I have here, as you can see back here, about the middle of, well, no, this was Q1 of 22. You can see assets 1.23 billion and dipped down all the way to 116, slowly came back up, now kind of back to where it was at 122 billion. However, the liabilities have basically steadily increased, and now you can see we went from 228 million back here on this 123 to 278 and a quarter million on this 122. And even though the equity for the most part has been rebounding nicely, we were above that 1 billion mark, and now we're sitting currently at about 946.5 million. So in my opinion, that's probably one of the few red flags that I'm seeing here. Even looking at the debt here, you can see it's basically steadily decreasing quarter over quarter. So I have a feeling that the positives on ramp are potentially outweighing the negatives. And again, with a situation like this, of course, we could have short-term volatility. The markets, again, as I always say, now we're still trading like near these highs. So if anything happens, we start to sell off, we have a 10-15% market correction. Something like this can go down, in my opinion, right? I mean, a lot of these numbers look good. But if markets do decide to correct and everything just kind of is red, 4 out of 5 days every week moving forward for a couple of months or something, this stock can definitely sell off and come down a little bit. But and here in the low 30s, in my opinion, I think it's a decent entry. I really do, especially for the longer term. And of course, if it does happen to sell off and drop sub 30, like the saying goes, if you liked it at 32, 33, you should love it at 30, 29, 28. So, a lot of people start to beat themselves up, and you have to know that these stocks fluctuate when you go into them. And a lot of people, immediately they'll just get negative with it, and it's our nature sometimes, we start to we start to second guess ourselves. We start to doubt the situation. Oh, I knew I shouldn't have bought it. Oh, I knew I should have waited, right? You start like reaffirming all these negatives in your mind. Like, it's not worth it. It's not worth it. That's why I always say, in my opinion, especially for the longer term, trading obviously is much more difficult in the shorter term. But if we're talking long-term investing, like what are you looking to hold and play for the next several years? This is why I say, in my opinion, you got to take a step back and you really got to go through a lot of these numbers. And I know it's tedious and I know it's a pain sometimes, but it really is worth it because, again, in my opinion, it looks like we have a lot more growing numbers than negative decreasing numbers here with ramp. So here at 34 and change, even if it does fluctuate, it goes down to 29 and then, it rebounds and it goes up to 37, 38. If you turn around 2-3 years from now, all of a sudden, there's a $50 stock, there's a $55 stock, this is a $60 stock. You like if you see the value there, the short-term volatility, in my opinion, should not talk you out of the situation, if you understand what I'm saying. But yeah, the liabilities and assets have been bouncing around, but a lot of this has been looking like it's on the rebound here for the last couple of quarters. Book value per share was up to almost 15. Then you can see consistently step down here to 1388, reclaim that 14, last quarter 1430. So we do still have a little bit of a rebound to make here. And again, assets now back to where they were with liabilities up a little bit of a chunk. So we have to see if these new added liabilities that the company is taking on translates into more revenue moving forward. And again, if we're going to turn around in a couple of quarters and we're going to be up to the 190, close to 200 million mark, going from the 140 to the almost 160 to now the 170, boom, now we're at 190, 200, right? If we are able to take that next leg higher and see 8, 10, 12% revenue growth consistently, then obviously the company, they're utilizing these liabilities significantly well, if that happens. Cash flow overall staying positive, but yeah, for the most part, I like this one, and I just wanted to show the technicals here. So again, we technically did not have a bullish hammer, but I want to show you here. See, we back up the last couple of months since the last earnings came out. Of course, they beat top and bottom line, and we can see that since then we had the big drop, and we've kind of been in this downward channel, breaking today actually, and then rising straight up, getting back to almost that mid-range, and again closing near the high of the day. So we have to see now if we break down and go to this trend line here, looking like about 32.95 on my screen, or if we stay in this wedge and just continue before popping out. But look at this. We back up a 1-year chart. Look at this. I go back to these lows of November 8th, 22, connecting to that low there, November 1st, 23, and you can see that coming down to the trend line, if these technicals stay in the pattern they've been in, you can see that the apex of this wedge is literally intersecting and is right at this support trend line going back from November of 22. Was it 22? Yeah, November 8th, 22. So you can see that technically, in my opinion, right, if the company is decently valued, then of course we can pull back, as you see, basically mid-range here of this little consolidated range would be right around the apex, which is right around the support trend line, which would be Yeah, about 33 and a third you're looking at. So you're looking at perhaps a point sell-off here. And of course, again, anything can happen. We can run up and we can break out here early. We can potentially break back down out of this wedge and try to approach this trend line early here. Again, sub 33 slightly, 32.95 about. But in my opinion, in the long term, I do like it. In the short term, I would see, again, if it stays in this wedge, and then I would potentially try to kind of play this perfect storm with the descending wedge and the support line kind of lining up for you so you can, as it's pulling back here into the 33s, you could potentially step in and, grab your calls and try to catch the pop out. But again, that's just my opinion. But there's a nice little setup here, it looks like. And of course, you can see we rallied up here to about 33, and then we pulled back, and then we had the gap up. So of course, we could have the gap fill. However, technically, that's not really a gap up because we were there and just kind of popped back to where it was prior. So I'm not exactly sure, in my opinion, if I would say like, oh, it's definitely got to come back here to, 33 and then bounce. But again, like I said, if it does need to pull back there, that technically could happen tomorrow, right? So we have to see, over the next couple of days how this one works out. But again, that's more short-term option trading really than longer-term shares. But here on the daily, again, stock charts, we can see that we've been in this downtrend. The MACD has been falling off. We could potentially flatten out and start to curl now. However, bottom Bollinger Band here, 32.87, which is why I'm saying we could pull back to that slight sub 33 mark before bouncing and everything kind of, curls and readjust, and then it starts climbing. You can see the RSI looked like it basically approached that 30 benchmark, and then we had that tick up today, 32.19, right? Almost forming that bullish hammer, but not quite, in my opinion. Well, it's not really an opinion. I mean, technically, it didn't form the bullish hammer. But you guys know I always say my opinion because it's just my opinion. But here also, we could potentially, now it's not really a reversal. I know sometimes like that straight line with that skinny little body of the candle going across the middle could signal the potential reversal, but here, in my opinion, again, it seems to be trending on the up and up, and even when it does dip below the mid-Bollinger Band, as you see, it kind of reclaims right away within the next couple of weeks or so. So that's why I'm saying, in my opinion, being here sub mid-Bollinger Band, again, we could potentially have about that dollar point drop, but then it really should, based on past performance, it really should bounce and try to get back above that mid-Bollinger Band that's sitting just a touch over 35.5. It's been above the 50-day moving average since about mid-April, it looks like. Hasn't retested almost. So, yeah. But again, in my opinion, if we're looking for the longer term, like we say, if we like it here at 34, 33, and then we happen to sell off and pull back and go down to that moving average, 30, slight sub 30, hey, listen, if we have more income and we're looking to build a position in it for the longer term, then what do we say? Take what the market gives us, right? But we can see the RSI was just kind of topped out here above 70 on the weekly. So the stock happened to top out. It was sitting above the 200-day moving average for the first time really since the bull dropped back in 2022. So this is what I mean. The company, it looked like a lot of the numbers. I appreciate the fact they were negative a while back here, 8 to 10 quarters ago. But now, again, we're seeing the profitability is rising. The revenue consistently keeps climbing. Again, now, they're working with brand name companies, and they recently mentioned, Amazon Web Services. So if this is a company that's providing a service that these major corporations need, but more importantly, it's proving itself in its efficiency and in its translation to more revenue dollars for those companies, then chances are they, will keep their subscription and they will keep utilizing this service, and it will probably work out for everyone, in my opinion. But the RSI, again, topped out at 70. The stock was above the 200-day, dropped back down. But again, we're looking for that bounce here because it doesn't usually spend much time going back the last 15 months anyway. It doesn't look like it spends a lot of time below the mid-Bollinger Band where we are now. So that's why I'm curious to see the next couple of days if it, does drop and then bounce right away, or if it just bounces from here potentially. So we have to see. But in my opinion, I'd say probably inside of the next couple of months, it should get back above this 200-day moving average, in my opinion, and reclaim that 39.55 mark. So over the longer term, I personally do like this, but it's just my opinion. We were riding high and then we dropped, as you see, about 3 of the last 5 weeks, and today is just Monday, so we need more of a clearer picture for this week, this week's candle. But we can see the MACD recently crossed to the downside, so this is why I'm saying we could have some selling pressure coming into the stock. We could potentially pull back another couple of dollars before moving higher. Let me see also real quick. I'll check the pivot points. And we can see here, what are we on? The weekly, you can see pivot point here, 32.31, which is why I'm saying we could potentially have that drop sub 33 and then hopefully bounce from there. But again, anything can happen, and we could break these points. We could potentially retest this 50-day down here at 30.56. And here on the weekly, what was this? About 35. No, it's like right there, 35.13, 35.08. We bounced, we broke through. Now we're coming down, 32.59. Yeah, so it looks like around that 32.5 mark. Does seem like 33.5, 32.5. So it's, it's kind of in that in between, you know what I mean? So of course, we could make the argument that it really could go either way. So from here, we can go 35, 36, or from here, we can go 33, 32. So we are kind of mid-range, and that's why I always say, in my opinion, if you're going to do options, you're better off buying time if you can, and if you're looking at the situation kind of similar to the way I am, and you're saying, okay, overall, I think this thing's going to go up over time, then you have to buy yourself time, right? For us to say, oh yeah, we think this can get back to 37, let's say hypothetically, like you can't buy 37 for this Friday, like you know what I'm saying? If you buy it for this Friday, now you're really gambling, right? And again, technically, I know there may be something in the technicals that could cause the pop or whatever, and obviously they could come out with some announcement and the stock could pop. But if you really think about that, I mean, that's a 3-point move on a $30 stock. So you're looking for a 10% rally for this stock to go on by this Friday. So that's why, again, I know it costs more, but it costs more for a reason, right? And this is why, again, in my opinion, with how it's currently trading, in my eyes, I would buy time on any calls. But for shares, in my opinion, if this has been on your watch list, if you've been adding, even averaging up for the last year or so on this rebound, it'd be understandable in my opinion. I mean, we looked at a lot of those financials, and again, just climbing nicely, beating estimates. And you can see, again, the net margin goes positive. Annually, we're growing nicely with upbeat forecast as well. Hold on one second. Price target maintained 51 by benchmark. Susquehanna to 50 from 45, maintains positive. Morgan Stanley raises from 47 to 49, keeps overweight, right? So these guys are aiming even higher than I am right now. So, I'm pretty conservative, actually, compared to a lot of these other analyst price target. Here we go. Let me see some earnings here. Yep, we beat. For fiscal Q4, the company expects revenue to be in range of 158 to 162 million. Analysts polled expect 158.5 million, so right at the bottom of that range. So if they're kind of mid-range, we're talking 159.5, 160, right? 160.3 million, which of course would be above expectations, which would technically be another beat on the revenue side. For fiscal 24, LiveRamp now expects revenue to be between 646 million and 650 million, compared with its previous outlook of 632 million to 637 million. Analysts surveyed expect 644, so their expectations are now below the new updated forecast for fiscal 24. So this is what I mean. It's the consistent positives, right? It's, are we consistently beating on the top and bottom line? Are we consistently beefing up our outlook moving forward? Are we outpacing Wall Street's estimates and Wall Street's growth? Are we getting positive reviews on our product and service? Is our footprint growing? Are we constantly signing new clients? Do analysts constantly have higher price targets on us? Are we constantly maintained as positive buy rating, outperform ratings, right? And it really seems, in my opinion, that ramp definitely has the positives outweighing the negatives here. So again, we could have the pullback here to this support trend line going back to, again, November 8th, 22, connecting to your bottom of November 1st, 23 on my screen, roughly 33.40, we'll call it. And yeah, we'll see in the next couple of days how this one performs in the short term. But in the long term, LiveRamp Holdings, RAMP, in my opinion, I think it's a buy. I think we got a grower here. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That's all I ask. That's our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.